Oh, hello.
Hello, sir.
Publius, do you think this is number 22?
Huh?
I think this is number 22. Beanstalk University, number 22. I'm gonna have to check on my
Is that a
numbers.
reference to something?
Oh, no reference. Just pretty cool. We've done 22 of them.
I guess so.
All right. So this is our weekly university, A&T University. All questions are welcome, but also this can kind of double as an AMA, as similar as the ones that we've been doing. So with that said, we'll just get right into it. We'll have you can raise your hand to come up and ask a question. You can also drop them in the chat, and I'll go through and read them that way. And if for some reason you can't do that, you can also DM me with any questions. So unless Publius, do you have anything you'd like to share before we get started?
Just that this has been such an incredible 8 days, and we're more enthusiastic than ever. So this is it's crazy stuff going on, but very exciting as well.
And Austin chimed in. This is class number 23. So there you go. Michael Jordan.
Jordan class.
Jordan class. And I'd also add that if you all haven't voted just yet, you can head over and vote. I think we've gotten quite a positive response to the Barn Raiser BFP. So you can find that in the announcements, a link to that in the announcements section. So now's a good time if you haven't. All right, the floor is open for questions. You can raise your hand, drop them in the class chat. Okay, we have our first question from Helen. Do you think a market crash happening between now and until the barn raise would affect the race?
Which market?
I think they're probably, well, Helen, can you clarify? But let's assume, the ETH, the general market,
I mean,
stock
is
and
that the
crypto.
market we're really worried about right now? I don't know. I'm half making a joke. It's kind of tongue in cheek. I mean, ultimately, hard to say. I feel like Beanstalk is kind of in its own market state that's somewhat distinct from the rest of the market at the moment. So wouldn't think that would have too much of an effect.
Okay, and from Scooby, any sort of update on the hack, leads from help from people / resources looking into the stolen funds?
So the only real substantive, update is that there's some wallet that it seems may be the wallet that funded the attack, via Tornado Cash. So the funds seem to still be in Tornado Cash, according to multiple reports. So it doesn't seem like they've hit any exchanges per se. But in terms of any leads or anything, there is some lead on the wallet that may have funded the initial attack and the exchange that funded that wallet, and so that is being pursued, but nothing substantive other than shit's happening, but it's nothing really to report.
Gotcha. Cool. From Harry Double Down Smith, what stablecoin is the raise going to be in? Will we be able to use just ETH?
Unclear. It won't be ETH, I don't think. It'll probably be a stablecoin. So,
are we planning on having any kind of under the hood transaction where someone could use ETH and then it could?
Don't think so, but maybe. Okay. But don't know. That's probably not so simple because previously all that under the hood functionality effectively leveraged the Bean ETH pool, and that doesn't exist right now. I guess it's possible, but it's unlikely. The goal is to keep this as technically simple as possible.
Gotcha. Yeah, that makes sense. That under the hood stuff would have utilized that. Several people are typing. Okay, from Edgar Allan Pizza. It's pretty clear that we're not going to go with this way. And this has probably been answered. But if we didn't do the barn raise and just turn things on, what would a bean recovery look like to get to $1? Massive weather, a lot of sowing.
So the crux of the problem is the state of Beanstalk is corrupted. So people may have stock and seeds and they could have their beans restored, but the LP tokens in the silo they're, at the moment gone and they need to be recapitalized. And so in short, what would happen would be there would be all these beans that get minted and everyone in theory would want to try to sell, but there's no liquidity whatsoever. And so then the protocol would, based on a whitelist, try to incentivize liquidity and demand for soil based on the liquidity in the pools. But, in a theoretical way, assuming it were possible, it would still be kind of ugly. And don't think the protocol would, have a good shot at recovering given the amount of liquidity to bean supply is at like 0% at the moment. But in theory, it's possible.
Okay, Harry Double Down Smith again. Did Nick Mudge join as a technical advisor?
Yes. Dumbling, can you answer this? I think you know more on like the official relationship.
Yeah, I guess I would just say that we were holding off to make any announcement until we had clarified things a little bit more. But we are having active talks with him, and it's very exciting. And yeah, I'm he's excited, enthusiastic, and we'll share more details as we sort of hammer that out more specifically. But he's certainly a friend to the project at this point. That's probably how I would say it.
Yeah, I'm with you, Harry. Dumpling needs to close this deal.
Okay, Niblets. There's a lot of good info explaining the barn raise conceptually, but I'm finding it harder to understand exactly the specific process of what to do and how. Is this documented somewhere and I missed it?
So, think there should be like a how-to or something published prior to the barn. I'm not actually too familiar what the process will be. Assume it'll be, through the website. You'll be able to, place your bids and place your sows, but don't have too much of a sense of what that will actually look like. It'll be something similar to the previous interactions with the website, presumably.
Okay, from IPO and Chill. Will the bidding mechanism and subsequent refund mechanism be audited ahead of launch?
So the bidding mechanism is going live on Monday. There's no way to have it audited prior to then. Now, with that said, that shouldn't be a large concern because of the simplicity of the mechanism. Furthermore, all of the settlement of the bids and the sows will happen after the conclusion of the barn raise, but before Beanstalk restarts. And so there will be a period of time where people can verify that all of their transactions were settled properly. And so, in short, given the simplicity of the bids and sows combined with there will be an opportunity and a time for everyone to verify prior to the system restarting, and the fact that there's a steep time crunch here, no, the mechanism itself for bidding and sowing will not be audited ahead of that. But obviously, the hope is to have the protocol itself audited as a whole prior to the launch.
Okay. Can you comment at all on demand for the barn raise and what realistic expectations are internally for, I guess, what the internal quote expectations are for filling the full 76 million?
Again, run the risk of speculating here. The short answer is it's unclear how much of the barn raised Beanstalk will fill. Think that there's certainly a chance that the entire thing fills. Think that's not off the table, and think that it's also possible that a third of it fills. Would be surprised if it only filled 10%. That would be very surprising, I think. But generally, it's very hard to have a sense of whether it's going to fill 25 million, 50 million, or the full 70, 77 or whatever.
Will you be getting a haircut before it? We've been kind of memeing no haircuts, so I think that Publius, you can't cut your hair. Harry says no haircut. Okay. In the event that ETH draws down significantly ahead of launch, would we delay the raise or would we pull through from IPO and chill? Oh, Publius, I think you're still muted or we lost you. My bad joke.
Can you hear me now?
I can hear you.
The short answer is because the raise is happening in stables, don't think that an ETH drawdown should affect things at all.
Okay. From Booney Boy, we got a complete newbie here. So ignore me if you want to use this period to answer other questions. I can also just read the docs. But what's the quick breakdown on how I, as an investor, can use Beanstalk?
Well, Beanstalk is a credit-based stablecoin issuer that creates incentives to participants to participate in the creation of utility in the form of bean stability. So in short, there is the ability to lend to the protocol for anytime there's soil, or you can deposit assets in the silo for stock. And at a high level, those are the two meta ways to get involved with the protocol and participate.
Okay, I just got a DM from Casper. Very enthusiastic about these, but he says he can't get up on stage. So let's see. Oh, here we go. Here we are. Okay, Casper, you're invited up.
Oh, I thought I specifically made it so Casper couldn't come up here. I don't know how this happened.
Oh, come on. I'm the one asking the good questions here.
How you doing, sir?
Good, man. I was just telling Dumpling, like, when Wonderland was still a thing, like, their voice chats or, like, their town halls were lit because people would just talk about the protocol. And, like, now I, like, can't find servers where that's a thing. But you guys are doing it, and I think it's super important for the community because people love this shit. Or at least I do.
Appreciate that.
Kind of a few questions. So first is like, I understand like the utility of the credit system is to get us back up to peg. But what's the utility of the silo? Like for maintaining peg? Or is it not really for me?
This is a great question. So the field is where peg stability comes from, ultimately at a core level. The ability to attract lenders is what creates peg stability. However, the silo is where beans have product market fit. So in particular, the silo is what facilitates the positive carry on beans. So it's not to say that it's impossible, but it's a harder economic problem to try to have Beanstalk pay out some sort of bean seigniorage to circulating beans and keep the price of a bean at $1, if that makes sense. The abstraction of having circulating beans be worth $1, but having deposited beans yield seigniorage, that is what facilitates, to a large extent, a less extreme version of the solution to this economic problem. However, just from a pure product market fit perspective, the ability to deposit beans in the silo or LP tokens with beans in them and receive bean seigniorage, that is what we envision over long periods of time being the primary use case for beans. Beans being the number one liquidity provider in DeFi makes a lot of sense because of the positive carry of beans. However, you only really get positive carry if they're in the silo. And why is that again? That's because it's much harder to keep the price of a bean steady if you're paying out seigniorage to circulating beans. You need some sort of distinction, if that makes sense.
For sure. And then on top of that, this like the seeds, I think you mentioned one time that seeds don't, and I might have misunderstood it, seeds don't really like matter. Like what do seeds accomplish that stock doesn't? What's the point?
Okay, so everything matters, but seeds yield more stock over time. And in particular, the reason for seeds, or the reason stock grows linearly over time, is to create some opportunity cost for leaving the silo. So in practice, when you deposit assets in the silo, you receive stock and seeds. When you withdraw those assets from the silo, you have to burn or forfeit all of the stock, all of the seeds, and all of the stock that grew from the seeds for the time you were deposited. Therefore, there's a linear amount of additional stock from seeds, because stock grows linearly from seeds, that you need to burn when you withdraw from the silo. Which, if you're withdrawing for good, doesn't really matter. But if your intention is to withdraw and come back in the future, then that's where the opportunity cost ultimately really manifests itself. And so you can make the argument even if you don't have an intention to come back, particularly when stock is liquid. But the concept is what the stock that grows from seeds does is it creates opportunity costs for leaving the silo, which makes assets in the silo very sticky, even when the price of a bean is below $1 and there's no short-term seigniorage. Does that make sense?
Yeah, but doesn't don't we already accomplish that with the stock?
It's a little hard to hear you, sir.
Oh, sorry. Can you hear me now?
Is that on my end, or can everyone else hear Casper?
Yeah. So I guess to answer your question, Casper.
Hello, can everyone hear me?
Yeah, we can hear you, dog.
Sorry, I think the internet's bad. What was your question or your rebuttal, Casper? I apologize.
I was just saying, can it sounds like the seed, I don't understand like what the seeds accomplish that stock can't accomplish, you know?
Oh, well, the short answer is there's two separate things. And I didn't mean to cut you off there, Publius. I think your feedback just hit my headphones as Casper was responding as well. Apologies. The seeds were primarily implemented as an accounting mechanism with which to implement the growth of stock over time. So in theory, you could have the opportunity cost from additional stock over time, but the key thing to note is it's not just the stock and the fact that you have to burn the stock, it's that the amount of stock you have to burn increases over time the more time you spend in the silo. Does that make sense? So the seeds aren't the substantive part. It's the fact that stock grows from the seeds. The seeds are just an accounting mechanism.
Gotcha. So it's really about the stock, and like the seeds just basically accentuate the focus on stock.
And in particular, what you may have misinterpreted from some previous comments was that in the future, whenever Beanstalk moves to a gauge system for stock distribution, seeds are highly likely to be abstracted away, such that there are no seeds in the system. There's just stock, additional stock, grown stock to different assets over time.
Got it. And then my last question, like I really like Frax. I think the model is pretty solid, but I understand that the collateral piece and like your viewpoint on that with like negative carry, and I think it makes a lot of sense. But do you know how like Frax wants to move towards like tracking CPI with their like FPI index, let's say, or token? And like, I think my understanding is that the way they're doing that is they're basically farming their collateral and using that earned yield to basically track CPI, which like increases each year. But if we have like if Beanstalk has no collateral, like or I guess what are your thoughts on that? Like, do you think eventually Beanstalk will also move towards that sort of CPI peg? And like if they do, like how would they keep it if they don't have collateral?
So Beanstalk, in theory, can issue assets pegged to arbitrary value as long as it has some way to determine the price of, the beans that are issued relative to that asset. So it could issue like a BTC bean compared to WBTC. It can issue a lot of different stuff. Now, currently, there seems to be by far the highest demand for dollar pegged stablecoins. But in the future, there's no reason. There is a little bit of economic complexity that may need to be figured out to get it done in a low friction fashion and an efficient fashion. But generally, Beanstalk could issue a CPI bean if you wanted to. Now, personally, I think the CPI is horrible and would never choose that as the index for inflation. However, think that there's something very interesting about some sort of hedged product, but that's a little bit of a ways down the road. But in theory, it's totally possible.
Sweet. Thank you. Appreciate it.
All right, thanks, Casper. And if you think of one later, you can always hop back up. Okay. What percentage of the 77 million is needed at a minimum for the barn raise to restore the protocol to a working condition?
0%. In theory, if the protocol raised 0% in the barn raise, that would be like restarting the protocol, which would be, you could make the argument it'd be better not to start at 0 because of the amount of exogenous demand at the moment. But if it raised $0 in the barn raise, maybe that means there is no exogenous demand. So kind of cuts both ways there.
From Turboy, what is Publius's day like? What does your average day look like these days?
Well, it's different for each of us. On this end, it's a lot of conversations with lawyers and people that might participate in the barn raise that have questions about Beanstalk, and talking with Beanstalk farms and people that work on Beanstalk, and trying to just stay on the same page as everyone, basically, because there's a lot of moving parts. So and then there's a lot of coding going on as well on Publius's end, which I think is wake up, code, go to sleep is the mantra I think they've been echoing recently. So it's definitely grind season on this end of things, but again, feeling very enthused by the opportunity here. So this is the only reward for hard work is more work. So this is all good stuff as far as we're concerned.
Okay, and I almost skipped one of Harry's questions. When is that Wall Street Journal article coming out?
Probably tomorrow. Not sure.
Okay. Breen is committing $5 here, hard. And Edgar Allan Pizza's matching it. So Okay. Booney Boy is asking, for a smaller account, what's the best strategy for someone with a smaller sized wallet, in order to invest?
We try not to give advice like that. So I think you're better off asking the Discord.
From Neural Virus, can you explain the reasoning behind the 33% split? For example, why wasn't it 50, 20, 25, 25, or any other ratio?
Well, as we've discussed previously, that split is pretty arbitrary, and it's really a question of negotiating what's a reasonable amount of preference to give the barn raised lenders, given that historically you've only been able to get in the back of the pod line, which was valuing Beanstalk at like 1.5 billion prior to the attack. Just even splitting it 1/3, 1/3, 1/3, and creating a new pod line is radically changing the opportunity to lend Beanstalk at a different price. So there is some question of, well, you can increase the priority, increase the payout, create some sort of exclusivity for a period of time. There's a lot of different ways to slice it, but it's unclear whether any of that would be necessary, or at the margin would attract more capital. And therefore it's a question of what's the elegant economic structure, and think that makes the most sense in short.
Scooby is asking, given you guys have been doxxed, are you willing to share any more about your background and experience? To be specific, all of Publius. So I guess he's asking all three Publius. Now there was a podcast recently. I think it was the Bankless DAO, where Publius went into a little more detail. But I don't know how much of that you want to repeat here, Publius, but you could maybe give Scooby a little something. Scooby says, just send me the podcast. So we'll drop a link. Comes in with it. Yeah, the Bankless DAO podcast. So that'll be good for you, Scooby.
No questions. We've only been on for like 17 hours in 8 days, so it's can't believe we're running out of questions here.
Niblets, I think we answered that. Okay, site says that the Barn Raiser tokens accepted will likely be USDC or USDT. When do we think we'll have a definitive answer?
Sometime before it starts, in theory. I have no idea. I think, to be honest, Niblets, that seems to be one of the things that are potentially a bargaining chip for the DAO, and so there's an ambivalence to commit at the moment because of that.
Also, I might add, Niblets, what would you prefer? It might be good for people to start throwing it out there if that's a. Okay, no preference. All right, just got a DM.
And also, do you think ultimately the decision will should be made through a snapshot vote as to what token the barn raise happens in?
Okay, from Scott C. Good evening. Is there any thought of creating a Barn Raise NFT for Barn Raise investors? I wonder if there's anyone we could. Yes, there is.
There's a lot of thought. A lot of
There,
thought.
there is a lot of thought. I wonder if I don't know, JWW. I don't know if you're near a mic and you want to come up and maybe speak a little bit about them.
Hey,
Hey, I know
Publius.
you've been working with a couple of different artists, and you're in touch with Dees as well. Do you want to give a little update on where we are with those?
Yeah, so we don't want to put the cart before the horse with this, but we are aiming to try to get some version of an NFT out with the launch that'll happen. We'll be kind of giving more details of what that'll actually entail from an investment side, and what it'll take. But we're still, first and foremost, working through what the design is going to look like, as you said, Dumpling. But we'll keep the community apprised the moment that we have more information. But we just don't want to overcommit to anything yet.
Sure thing. Okay, appreciate it. Well, yeah, I would say yes, we don't want to overcommit, but get excited for something. So um, hopefully we can start sharing a little something for you here pretty soon. Okay. Okay, Niblet says no preference. They just want to know which bag to draw from. Which oh, let's see. GK033 is having a little technical issue that we'll try to address. Okay, from Bean Bankman Refried. Let's say Bean raises enough through the barn raise. Are you worried about the imbalance of the split between the silo and the pod line going forward until the new pod line is paid off? For example, could there be a lower incentive to LP post unpause due to lower APR versus prior to the hack?
At the margin, maybe a little bit, but in the grand scheme of things, it's like, from 50% down to 33% is, it's not the end of the world effectively. It's like a third. So, previously the LPs were yielding 200 and something percent. So, now it'll be yielding 100 and something percent. Don't think that'll be the end of the world for Beanstalk, although at the margin, it probably will have some effect.
From Harvey Birdman, could you potentially update the split if the 33-33-33 isn't working out?
Anything is possible, but going back to like previous discussions around changing the 50-50 split, don't think that's, good for the integrity of the protocol. Slow day at the office, guys. What's going on here?
Okay, we got a hand. Green.
Hello, everyone.
Hello, Green.
Hello. Sorry to come on here like a small brain that hasn't done much homework. I just recently heard about you guys. Sorry about what happened, and just have a super quick question. Primarily just wondering what is the big incentive? Because I was reading your guys' post on that restoring the fund is going to look like a seed stage investment opportunity for people, and I wanted to talk to someone about why it looks like a stage investment. Just by reading it, it looked like we would just get a higher interest rate for a couple of days, but
So,
what do you guys mean by that?
So I didn't write that, but I do have a sense of what they meant by that, which is Beanstalk, at this point, it's a little bit more mature than it once was. But the concept is that this is an opportunity to acquire Beanstalk or beans at a price or a market cap or an implied valuation, however you want to slice it, that has not been available for a significant period of time, if that makes sense. So I think that what they were getting at was that there's a little bit of a back in time aspect to when Beanstalk more closely resembled being in like a seed stage, you know, and therefore there's some sort of benefit there. I think would be what we would make of that.
So it's mostly from the slice in market cap, since we would be recapitalizing the protocol. It's an opportunity to help support it on the way back up.
Correct. And if and this is the substantive point, if Beanstalk only raises 1% of the capital, it will launch at $1 million market cap, literally one. So, you know, if you're that first investor in line, it is sort of a seed stage to a large extent. Even if in practice the whole thing fails and then you actually are at 108 million instead of 1 million, the concept is it's still a very, comparatively to what Beanstalk was offering prior to the attack, it's a much earlier exposure opportunity or lower cost basis or lower market cap, however you want to think about it.
So pretty much there's investors would be entering with no premium in a way. Is that correct?
Well, that might be an understatement. Whereas prior beans were trading at like 103, 105, this is now entering at a discount.
Okay. A discount because you're buying under $1?
Correct, because of the interest rate.
Oh, okay. Wow. Okay. Thank you so much, guys. Appreciate it.
Yeah, sure thing.
Okay, we're picking from several questions here. From Edgar Allen Pizza, I'd love to hear more about the future of beans and how they can be used to provide liquidity. If you can explain in more basic terms how the silo plays a role in that, I'd benefit a lot from that also.
Sure. So beans, particularly beans in the silo, have positive carry. And that positive carry makes beans a very attractive asset to trade against. And so in short, and BIP12 was the first step in this direction, the ability to deposit various LP tokens in the silo such that the beans in those pools are providing positive carry to the pool, that's a game changer for DeFi, or at least potentially it is, and we would argue that it is. Because currently, all these assets are trading against either ETH, which is super volatile, or a negative carry stablecoin, and are paying the cost for that. And so the concept of now a positive carry stablecoin can really fundamentally change the structure of DeFi.
Okay, and just a quick one here. I think we kind of answered it earlier, but hi, could you explain what will happen if the raise doesn't get to 77 million? Will the protocol still continue?
The short answer is the protocol will scale all of its obligations based on the percent of the fundraise that is complete. So if it raises 50%, the state of Beanstalk prior to the attack will be scaled by 50%. If it raises 30%, it'll be scaled down by 70%, and so on. And just for reference, Dumpling, I think you did skip a couple questions above.
Okay. Yep. What's the Beanstalk forecast in 100 days? Back to pegging hard?
100 days from today. God willing, sir. In 100 days, Beans, God willing, should be back to pegging hard.
Okay, and from not sure, any updates on the bug bounty initiatives?
Not personally, haven't been involved in that process, but maybe if anyone who is involved is in class, they can hop up here. But don't see Silo Chat or Sweet Red Beans, who I think were the two people leading that. So don't have an update for you there.
Okay, from Breen, could you shine light on the price Bean will be once it restarts? If we start at the price from pre-hack, we will mint a lot more because we're using a curve pool instead of the XYK pools. What are your thoughts on this?
Yeah, there's a lot to be said here. Don't really know yet what the right thing to do is. Think it might be a function of the success of the barn raise. It's a very interesting question, Breen. And one I don't have any, at least at this point, don't have any sophisticated thoughts to share.
Okay, we have a hand from Slacking.
Oh, I think I can speak now.
Yes, we can hear you.
Okay, yeah, so the question is just something related to what is written in the snapshot. So it says here, just a piece, participants can sow at any time during the sowing period, so long as there is available soil. Sows will clear based on the weather at the time of the sow. So I'm not entirely sure how the whole sowing period will transpire. Like initially, I thought the weather would just increase and then the bids will just in some kind of FIFO ordering, I would presume by.
Yes, that is true. But the concept is that during the sowing period, in addition to the bids clearing, people can also get in line during the sowing period without having bid in advance. So it's not like, otherwise at the end of the bidding period, all of the bids could just settle. There'd be no need for the sowing period. The point is over 3 days, people can then get in line as the system is clearing.
Okay. But the whole reason for the bidding period is the bonus, presumably.
Well, for Beanstalk's purposes, it's willing to pay a bonus for people to price the
Right.
market. And
Yeah,
the system de-risks the more that it's bid, right? So there's a benefit to Beanstalk. But, the reason individuals would want to bid would be the bonus.
Yeah, okay. Yeah, okay. That makes sense. Thanks.
Okay, thanks, Slacking. From Long Live Bean, can you explain what positive carry actually is fundamentally and contrast it to the default negative carry in DeFi?
Positive carry means receiving some sort of yield for holding the stable coin. In the case of beans, that's the bean seniorage for holding beans in the silo. In contrast, there are stable coins that have a negative carry cost, either an explicit rent associated with holding the coin like DAI, or an implicit negative carry cost in the form of opportunity cost for holding the coin instead of lending it out effectively. Because if you can receive 10 or 12% for just lending out the asset, there's a negative implicit carry cost associated with holding on to those stable coins instead of lending them out for that 10 or 12%.
Okay, and second question from Long Live Bean. What are the specific questions being asked by institutional investors or VCs regarding the barn raise and the future of Beanstalk?
Oh man, there's literally infinite questions. Literally infinite questions. And one of the things that we were just thinking to ourselves is it's so funny that everyone comes up with their own questions that are totally different. So very hard to give a summary.
From Bean Boozled, will bids be publicly listed for all to see?
Duh. This is all on chain, baby. So everyone's going to get to see all this happen in real time.
Just looking for any I might have missed. Here we go. Assuming we raise the full 77 million and our silo LPs are fully vested and no haircut, was there any lesson learned with holding vast majority of net worth in this protocol, or do you plan on making any personal allocation changes to the protocol, regardless of the assumed beefed up security?
Well, it's a funny question, right? Because it assumes that's like the ideal portfolio allocation, whereas, it's probably important for context. We're like 24-year-olds. Like, it's not like we have a lot of money, So the fact that Beanstalk did so well is really, de facto, it's the vast majority of our personal funds, if you know what I mean. So it's like, well, in theory, but then what you're really asking is how much additional you'd like to cash out. And it's like, well, don't really feel like, cashing out is the thing to be doing at the moment. And it's like, even at scale, you sell 10% of your beans, you sell 20% of your beans. It's not really going to, when all your money is in Beanstalk, it's like, doesn't really substantively change your allocation ultimately. And it's like, then, Beanstalk is going to, I don't know. There's nowhere I'd rather have my money either. So I don't know,
Okay. Anyone want to come up on stage? Ask a question? Slow day in the office indeed. Casper's got a question. Oh, he's raising it.
People are complimenting Dumpling's hosting abilities, and then he goes and does this.
Getting cocky. Let's go, Casper. What do you got?
Oh shoot, can you guys hear me?
I can now, yeah.
Okay. Well, I think I was talking with Austin earlier in the Discord about like the whole like death spiral thing with algo stablecoins. Like, would be curious to hear your thoughts on like why the credit model might be better than other models for like, or how it would react in the death spiral scenario. And why, like, yeah, sorry.
No, I'm sorry for cutting you off. I would argue that the death spiral scenario is somewhat specific to algo or credit-based stablecoins. When you have collateral, it's not really that big of a problem. Like, you see what's happening to MIM, where there's a deficit in the pool, but they're way over collateralized, and it's still, worth 99.7 or something, right? So the death spiral scenario, which has happened in practice to every other stablecoin except for Beanstalk, every other credit-based stablecoin, is very real. And in practice, Beanstalk has a wide variety of different complementary mechanisms designed to limit the death spiral or the run on the bank scenario. So the first, from the highest level, Beanstalk minimizes the run on the bank by not overprinting. If you look at historically all of previous attempts at credit-based stablecoins, they all minted according to the quantity theory of money, whereby when the price was 1% above $1, they would increase their supply by 1%. That is crazy. Beanstalk mints beans based on the amount of beans that need to be sold to return the price to $1. So if over the previous hour 100,000 beans needed to be sold to return the price to $1, only 100,000 beans would be minted, independent of whether the price was 101, 102, or 103 or $2. And that market-based approach prevents over minting when the price is too high. Furthermore, one of the things that creates a run on the bank is inorganic demand. People that come into the protocol when the price is too high and are going to leave when the price is too low no matter what. And anytime you write into a smart contract that at a given price there will be inflation, that does create some sort of perverse incentive structure whereby at that price there's going to be some inorganic demand for that asset. And so Beanstalk, via a couple different mechanisms, the stock system being the primary one, makes it such that your return for buying beans when the price is too high can only really be expected to be positive if you have a longer term time horizon. And therefore, at least from an incentive perspective, Beanstalk tries to limit the amount of money that is likely to run on the bank to enter it as possible. However, there's always going to be these scenarios where you have short-term or long-term significant decreases in demand for beans, and that's where there are two main mechanisms. One is conversions, which BIP7 introduced, whereby liquidity can be scaled down at the expense of, the price can be saved at the expense of the depth of liquidity, and then soil, which is the core mechanism. Where assuming there's demand to lend to Beanstalk, the protocol can return the price to $1 over time, despite having significant outflows. So all of those different things combine to limit as much as possible, without guaranteeing or preventing it, the prevention of it, a run on the bank per se.
Got it. And I've never heard that selling piece. So how do you guys actually sell the right amount of supply as opposed to just minting to everyone?
So Beanstalk doesn't sell it unless it's a season of plenty. It just measures it and then mints it, if that makes sense. So it just measures over the previous hour how many beans needed to be sold for the price to be exactly $1, or how many beans needed to be bought.
Got it. Okay. And we want to consistently be above. Is it fair to say we want to be consistently a bit above peg? Because that
no, I would argue the goal of Beanstalk is to regularly oscillate the price above and below $1. Does that make sense? Now you may want the average price to be ever so slightly above $1, such that on average there's bean seniorage, but at a protocol level, the goal of Beanstalk is not to just mint and be above 1. It's to oscillate the price above 1 and below 1 and create utility by doing it. However, if it spends a little more time above 1 such that there's minting, that's probably healthy.
Got it. Sweet. All right. Thank you, guys.
Thank you, sir.
I have a question for you that kind of relates to what we were just talking about. Assuming that right before the exploit, we were kind of riding that $3 for quite a while, and a lot of that was because we didn't have the generalized minting. But are you ever I'm just curious about your thoughts in a future where a lot of people are earning seniorage but are not selling because they think that the best, kind of like what we were talking about earlier, that if they think that the opportunity cost for them taking it out of the silo is just too high, are you ever, would you ever consider updating the model to assume that 50 or 75% of the people are just going to keep their beans in the silo, if people really start doing that?
Well, in practice, the model specifically makes no assumptions about user behavior whatsoever, basically. So instead, what Beanstalk does is it just takes a screenshot or a snapshot over the previous hour, not a screenshot, a snapshot over the previous hour, to get a sense of the state of the system, in particular, the bean supply and the weather. And it tries to adjust the bean supply and the weather appropriately. But that's all it does.
When we're looking at the lack of beans in a given liquidity pool, I guess I was assuming that people that, by issuing that seniorage, we're assuming that a certain percentage of those people are selling, which is going to bring the price back down to peg.
No assumptions made whatsoever. Like, the concept is every hour Beanstalk takes another measurement because it doesn't know if people are going to sell or not, right? And it doesn't really care. It just, every hour it tries to adjust as appropriate based on whether people did or didn't.
But won't the price not go down if people don't sell?
That is a fact.
And the goal is to get us back down. I mean, to regularly oscillate.
Well,
right?
to be clear,
yeah.
Beanstalk will then mint supply until there is enough supply that the price returns to $1, right? So that's the model. So in theory, you're totally right. There is some sense of, well, people may not want to sell their beans, but that's where convert comes in.
Yes. Okay, well, that leads us to our next question. Because if I was selling anything, it was in order to convert. So will conversions be available at startup?
Well, it depends if there's more than one liquidity pool or not. If there's only one, then... Well, I guess actually that's a stupid thing to say. Converts will be live upon launch. I don't know why I thought about generalized convert there. But yeah, you'll be able to convert. There's no reason why you shouldn't be.
Okay, great. Okay, from GK033, how did the idea for Beanstalk come about? How was this idea of a credit-based coin that doesn't overprint thought of? And also adding as an edit to the last question that Casper asked, if Bean is never above peg, if there's no APY, and if Bean doesn't benefit from an APY higher than, I'm sorry. I'm not sure I understand the last bit of that question, but could you get a bit of a history where the idea of Beanstalk came from?
Well, we had a previous conviction that the supply shortage in stablecoins and the negative carry were a big problem. But in terms of a solution, we were really inspired by ESD and the success of ESD. Even Basis in 2017, to me, at the time, it was very clear it was like a get-rich-quick scheme, effectively, for the early backers, and the structure of the seniors seemed totally corrupt, effectively, and so didn't pay too much attention to it, basically. And then when ESD blew up, that was very inspiring to give it another look. And then we very, very quickly fell down the deep rabbit hole here.
Okay, from Geo3Met, I think we kind of touched on this a little bit earlier, but I'll read it anyways. Apologies for the dumb question. I came via Bankless as well, and I'm still getting my head around the terminology, beans, silo, etc. If I had X dollars to invest and support Beanstalk, is there a documentation or guides that say, start here and do this, and if you had more, then you would want to do this? For example, how you invest in the protocol. Basically, I'm looking for various tracks based on investment and investment size.
Yeah, that's not something you're gonna find here. What you will find is very clear explanations of what things are and how they work and how you can use them if you want to, but no sort of like investment advice of any sort.
But Geo, there is a active Discord. You can head to the general. There's a lot of people you can engage with and discuss that sort of thing with. But okay, I love Chicago. Okay, from Jams, question for me. How are the educational marketing materials coming along? We've noticed some more interest from individuals that are new to Bean. Yeah, we have had a big influx of people. You've seen it in the growth of these calls, and you can also see it in the type of questions here. Also, I'm just noticing we're just about to go over time, so we should probably wrap it here pretty soon. But there has been a lot of progress in different educational materials that should be coming out prior to the barn raise. So I know there's some videos being made. There should be quite a bit. So we'll be starting to share that as we approach Monday, and yeah, we're looking to do a really big, kind of marketing push, kind of a groundswell to get, the word out, as wide as we can. And then also some sort of shareable stuff so that after you've, uh, been a part of the barn raise, then you can, do a social post and that sort of thing to kind of show that you were a part of the thing. So without committing too much to anything, there was a little bit of mention of NFTs. So we're really going great guns on that, and yeah, we're just really excited to pull this thing off. So I think we'll probably wrap it there. Publius, do you have any last thoughts? Or
So Mod asked us to just restate the time and info on the barn raise. So that's scheduled to start Monday at noon Eastern, the 7-day bidding period, followed by the 3-day sowing period starting Monday the 9th at noon Eastern. So lots to do between now and then, but very excited.
okay, well, everyone, thanks for coming by. We'll be posting more events for this week, so keep your eye out in the events channel. And yeah, I really appreciate you all stopping by, and look forward to seeing you again soon.
Peace out, y'all.